to start out knowing what you know now, but restart your journey, hit the reset button on the trading journey, would there be things you do differently?
Absolutely, dude.
Yeah.
Absolutely. For one, I wouldn't have thrown money at the market as soon as I joined it. As soon as I discovered trading, started throwing money at the market, you're like,
Right.
okay, no more demoing. I want to make real money, That's what I've done. So I would have prevented that by educating myself more. I would have been reading more. I picked up a book after I started trading, which is not the way to go. So I think what I would have done differently is just read more.
Well, how much, if you don't mind me asking, how much did you put in?
Right away, it was probably a couple hundred, at least $200.
Okay.
To start, but then you lose a little bit.
Yeah.
This is another point too. What I would have done differently is not add to my losses, meaning I would lose $50. Add another 100. Okay, now I'm up. In my mind, I'm up. I'm not down. Right? I'm trying to feed my ego. Like it's okay. It's all right. Just keep adding more cash.
It was like trying to double up your account.
Yeah.
Exactly. You know what I mean? As fast as you could.
Yes, and like when I first came in, you see everyone just making money. That's why.
That's right.
So I wanted to make money.
Yeah, and same for me. Like when I started out, I felt like I was being left behind.
Yeah.
So I had to hurry up, get in line right away, even though I didn't know what I was doing.
Yeah.
I didn't have proper knowledge. I started learning, but of course, I think we have that natural tendency to just jump in.
Yeah.
But in a way, it can be good too.
Yeah,
to just jump in.
Definitely.
Yeah.
You don't want to be paralyzed by fear of entering the market.
So more so, you would just take some time to go study before.
Yeah, definitely. Maybe read a little more. Maybe not just dedicate myself to one course or one teacher. Just want to expand my viewpoint.
Would you hit YouTube right away?
I wish I had actually. I wish I watched more YouTube videos on different traders. I was just so tunnel vision on one specific way to trade and one specific way to live, that lifestyle. I wasn't expanding my mind that you could be a family figure and be able to trade, So I thought you had to be a certain type,
So more so gain an overall knowledge.
Yeah, overall knowledge for sure.
Same, I'd probably do the same. Because like I said, when I started out, I was following a mentor or two mentors. And I thought, okay, as long as I follow what they do, I'm going to be making money. It took a year and a half for me to realize, okay, that strategy did not fit me. That approach does not fit me. And I think if I was able to go back, restart, find a way to compress that year and a half to find the thing that fits me, which leads into strategy and edge.
Yes.
Right? Finding that thing that fits. So if I could restart, I would probably definitely find a way to compress that time.
I gotta acknowledge you, man. Look, you said it a year and a half only.
Year and a half.
To realize it took me years, dude. It took me years to realize. Oh, you have to trade your personality. It's not specifically the edge, whether it's working or not.
Yeah.
It probably works for some people.
Yeah.
When it comes to edge, I think for a lot of traders, we can have a profitable edge, but can we stick to it? And again, it refers back to you, how you have to trade your personality, trade what fits you. And I think that discipline, can you stay disciplined to plan A or can you stay disciplined to plan B?
When we talk about edge, right, this is one thing I didn't have back then, was looking at the next 1,000 trades instead of the next 5 trades.
Very key, man. Very key.
Bruh, I'm sure people are out there, they're thinking, okay, I need to just catch that one big home run and I'm good.
Yeah.
Yeah? I'm going to throw whatever it takes to hit that home run. And with trading, I guess through the journey of maturing as a trader, you learn that, you know what? My probability of hitting that home run, if I have that approach, might not work out.
It's think long term, right?
Think
that's
long
kind of
term.
what I'm thinking of. Is think long term than the immediate gratification.
Yeah, that's right.
Delayed gratification is one of the biggest things that traders need to overcome. We live in a society where we just want instant gratification all the time. But if we just remain disciplined with our edge, know that our edge works out over 1,000 trades, then we're gonna be profitable in the end.
Right. When it comes to edge too, I think for myself, I didn't understand that losses are inevitable.
Yeah. True.
You know, I hate losing.
Yeah, everyone
And I don't think I realized that losses come, right, as much as winners come, if not more. There's that saying, David Ricardo, back in maybe centuries ago, he said, cut your losses short, let your winners run. I don't know if he said it verbatim, but generally
Just yeah,
that's
for
it,
sure.
right? Cut your losses. You ever seen, like, especially crypto nowadays, the guys, crypto's down a lot. I mean, all the stocks are down. A lot of people like to see it as buying opportunities. If you're holding a position, like a crypto position, it's already down, would it be wise to buy more positions into it?
I would say, I mean, it depends on what type of trader you are. Are you a long-term investor? You know, is this something that you do on the side? Or are you a day trader and you're just holding that position, hoping on a whim, on a wish that it'll come back?
Let's talk about the day trader.
Yeah, so if we're talking about that day trader, you need to cut that loss.
Cut
man.
it.
You need to just accept it and move on. You know, that's what I'm thinking. It's that hubris in all of us, or like the ego, where we want to be right. So I'm just gonna double down. I'm just gonna keep like me in the beginning. I kept adding money to the fire, and it just kept burning up. So like, what would you say for the day trader, man?
I think being able to let go of the trade, like I said, zoom out. Look at the next 1,000 trades compared to the next trade you're going to make during the day session. Cutting losses is so key. You have to just be done with it. You can't be married to the position.
That's a key point right there. Don't be married to your position, right?
That's it. Say you are learning from other people, and say you did find a mentor, you like that person, or books, or listening to audio. It's like a human reaction, or human nature, to just kind of compare.
Oh yeah, absolutely. I mean, like, it's hard almost not to do it. We always have to catch ourselves, and I think that's a key part of the maturity in just life in general, is like catching that thought, like, wait, I don't need to be comparing. But like in trading, it's almost a different realm, you know, I feel like emotions in trading are amplified.
That's it.
You know?
Magnifying glass.
Yeah, magnifying glass. It magnifies who we are. That's what, you know, why we are so drawn to trading. But so coming back to that comparing analysis, you know, I'm thinking there's insecurity there. There's jealousy when I'm seeing another person. In the beginning of my journey, I'm seeing other people make more money than me. I'm seeing other people win more than me. I'm like, what is wrong with me? Like, I need to be on their level. I need to get better. I need to do the work, put in more time. Even though you're taking years and you're putting in all that work, it's just, it comes down to self-reflection.
And a big part of that, the comparison trap, I feel like a lot of people bring in the scarcity mentality, where when they see other people winning in trading, we're just talking about trading, but you know, anything in life, when you see a lot of people winning, they feel like, well, this is for me too. They feel like, success is limited. I need to get on that track right away, because that train's gonna leave me, you know? And I think when you go through the maturity in trading, you start to realize there's no limit to the success. There's no X amount of people are only going to win. So that's one thing I think was holding me back with the comparison trap, psychology, the mindset.
Yeah, I mean, like, there's so much to unpack on just that word comparison, right? Like, we see it in social media all the time, how many traders, like, especially in this industry of trading, see how many people are like making thousands of dollars in 30 minutes, and you're like, I want to be at that level. But we don't realize their account size, for one. You just look at that dollar sign, so you have, again, tunnel vision on, I need to be there, I want that money. For example, that I can think of is, if I see you, for example, making money on a certain position, I'm like, I'm not in this position, I need to get into this position. And then let's say I lose from my strategy. I'm like, you know what, maybe my strategy's messed up. Maybe I got to trade like Glenn. And like that's just an example. Like, we see traders all the time changing their jumping, leapfrogging to strategy, not realizing that, no, you could pick and choose from your strategies, create your own, and become profitable on that. Because you got to, again, we go to point one, trade your personality, trade what you're comfortable with the edge, right?
Mm-hmm. Yeah, they always say, well, there's a million ways to make $1 million.
Oh, true.
Starting our trading journey, we have the comparison trap. Of course, we're looking at other traders. There's a other big distraction out there called the news or media, social media. you know, and it's tugging, right? You just think we're one trader, and you got the news, they got social media, you got the news, you got TV, you got movies, whatever. Then you got word of mouth, friends, family, co-workers, aside from the other traders that you're trying to, you know, following or whatever. All those things are influencing or can influence your decision making.
Absolutely.
And so I hear stories where people somewhat rely on the news for their investing or trading decision making. And you know, the news, they always switch their stance every day, man. It's clockwork, right? So how do you know, going back, zooming out, and 1,000 trades for a new trader, you have to have a strategy or direction where you can make it robust, make it have a foundation for it, where you don't stray away all the time. So that way, when you have all these distractions, it's gonna come. Unless you live in a little bubble on an island with no reception or whatever, I don't know how you're gonna trade. You're gonna face that. The normal average Joe will face that, right? So you have to be careful with making trading decisions off of those words or distractions.
I like that, distractions. It's like distractions are external, like that's what I think.
Yeah.
And then what we allow, you know, it's like a philosophical saying, like we can't let the waters inside of us turn from outside weather, right? It's like external distractions shouldn't influence the internal mindset. And so, but we tend to do that a lot. I mean, we're humans. Human nature, it's a part of all of us. It's just coming back to that psychological awareness that, hey, I want to do this trade because this person is in it, and I know they're a $1 million trader. I want to be like this person. You know, you got to remove that external distraction. Kind of just like pat them on the back. Hey, good for them. That person is doing great.
Right.
That's awesome.
Right.
But the market conditions aren't fitting my personality / my edge. So I'm just going to sit on the sidelines. I'm going to be patient and wait for my edge to play out.
I think to add to that, though, say a person is totally new and don't have much knowledge or experience yet, it would be wise to follow an experienced trader. The caveat is you have to know or truly understand, like, hey, what's behind his decision making, his or her decision making? Yeah. What's behind that strategy? What is the edge? Mm-hmm. And follow it. Go ahead, right? And then get your feet wet. But you can't totally just say, hey, I'm gonna make my trading career rely on that person's trading, you know, following them.
Yeah, because there's going to be a point where you need to take the what is it called?
The reins
of your trading journey.
Yeah.
And start handling it. I'm not going to give you it and like you trade for. I want to be a trader, but I want to follow whatever you do.
You can take like the horse to the water, but you can't make it drink.
Yeah, exactly. That's it, dude. That's it. And that's pretty much what like any course or mentor will do. They'll lead you to where you can be profitable, and it's up to you to take that action on a conscious basis, daily basis.
Going off of the following a mentor, established trader, of course, the biggest difference between them and a new trader will be their trading account size, or right. So the amount of money. I was kind of intimidated in a way because I saw so many zeros behind their trading sizes, and I'm like, dude, I only got a few $100 or a few $1,000. Like, I can't do that.
How did you like pull yourself back besides looking at the long-term goal? How did you pull yourself out? Like, okay, the zeros don't matter. What did you begin to focus on besides the dollar sign?
Initially, people get into trading because they want to somewhat increase their income to get the lifestyle they want. And for me, of course, I had to fight that cycle of like, okay, I need to make as much money as I can as fast as possible, this and that. I think the market humbled me after losing a lot.
It does that to everyone, brother.
it humbled me to a point where like, okay, I'm responsible. I think when I started to realize I'm responsible for my results, not the market, not the mentor or whatever. I'm responsible for it. And if I'm going from that stance, then that kind of led the way to thinking in a more longer term, more holistic type of view. Yeah, so and so is making money. Buffett's doing that. Elon's doing that. Whatever. Bridgewater Capital. They're all doing those things. Okay, but at the end of the day, what do you have control of?
Your actions, yourself.
Your actions,
your thoughts,
your perspective, your view, and how much money you can lose.
Ooh, risk management, super key. You mentioned though, like Bridgewater Capital, like all these actual funds that have historical data. You know, when you look at their sheet of their earnings, it usually comes out like Purple Valley. I'm thinking of is how do they show? They show their account, like how much they're managing.
Yeah.
And then they show in percentage how much they are up or down for the year. And I think for me, when I put that perspective, when I changed those dollar signs, that dollar figure to the percentage sign, that made everything more manageable and achievable. Like, okay, I could do this. I could get 2%, but you know that 2% on a certain account could be $20,000. Whereas 2% on, you know, $1,000 is only $20. So, I mean, like, that's the perspective that really shifted my mind. Like, oh, wow, it doesn't matter how much money I have in my capital. It matters the percentage wise on how much I'm up or down. That's the key point right there.
Did it help you somewhat detach yourself from the actual just money part? Like,
yeah, I would say so. Yes, absolutely.
Because when people see the dollar signs, they bring all their emotions or whatever attached to that.
Dude,
their views on money, their relationship on money, and so if that's somewhat clouding most of their brain power, then where's the trading brain power going to come in? You know, and so I think what you were saying when you switch it from dollars to percentage, you're able to just, okay, now I'm focused on me. Let's focus on this account. You start your language starts changing.
Yeah,
right?
Definitely.
And so I think just those little minute shifts were the things that, you know, got you here today or got us today to be mature, be a better trader than we were yesterday. Yeah.
So if we could like break it down or sum it up into 3 key points for a new trader, what would you have done differently, or what would we recommend them to do differently than what we took?
What I would focus on, if I was starting out again, I would focus on a lot of it's with us, right? So you could kind of sum it up into, we have this acronym, you know, that we use. It's called REP, right? Risk management, edge, and psychology. And with those 3 as your main pillars, right? Learning about that, we kind of just talked about the edge, having the strategy. There's a million ways to make $1 million, right? But finding the one that fits you. Losses are inevitable, so that helps with the psychology part. And the comparison trap is a big thing that kind of morphs into psychology and risk management as well. Because you're going to see bigger guys, bigger traders trading bigger contracts, and that might sway us away from, you know, moving forward with our journey. And so we just kind of sum it up to those 3 things, right? The reps, risk management, edge, and psychology. And once you learn those, you should be on a better track or better way to your trading journey.
I couldn't have said it better myself, man. That's good. That's solid.
Yeah.
All right, guys, we hope that helps you. If you're a new trader, just take that into consideration, those 3 key points, those 3 pillars: risk, edge, and psychology. And with that, we'll see you in our next podcast.
If you like episodes like this, be sure to follow us on all the social media channels, YouTube, hit the subscribe button, and follow us on the podcast. And thanks for listening.